Good morning, everyone, and welcome to the program. This is Business Morning, Wednesday, the 16th of August. I am Boss Namafaye, live here from Channel's Global Headquarters, Lagos, the home of Nigeria's financial markets. Let's get started. We have quite a lot packed into the next 1 hour of the programming. We thank everyone who's contributed to making the next 1 hour possible. Let's get the show started from the telecommunications sector. The sector regulator, the NCC, says he's sending his technical or financial tech experts, or what you call financial auditors and others, into too big to fail telecommunications companies to assess their financial status. This is the latest from Nigeria Communications Commission. After the fallout of $1.2 billion, it is at Nigeria, now 9 Mobile, controversy with about 13 Nigerian banks. That very messy situation. The NCC says it doesn't want a repeat of that again to happen. So a team of NCC's accountants and auditors, financial experts are now going into this big telecommunications companies, and you know them by their names, isn't it, to find out their credit and debit balances, including their bank loans. The NCC says it doesn't want to get embarrassed anymore by the situations that occurred in the case of Etisalat Nigeria 9, now 9 Mobile. The stress test, as we call it in the banking system, this is a bit of a stress test by the NCC, the first of its kind since we have the telecommunications revolution in Nigeria about a dozen years ago, will include checking the problems with drop calls, unsolicited messages from the big telecommunication companies. NCC official says this stress test or financial check will take about 2 months to conclude. We're not sure, and the NCC did not say if the results of the stress test will be made possible. We would like that to be made public to know what is the state of the big or too big to fail telecommunications companies. Now let's get into, of course, the big story everyone has been chewing over since late yesterday's afternoon. Nigeria's GT Bank, that's one of the Tier-1 lenders, 5 of them actually. This is the second to report. A few days ago, last week, we had Zenith Bank on the street. Now GT Bank has reported better than expected numbers. We call it earnings that beat the streets. So if you hear that phrase, that's what it means. GTB earnings actually beat the streets. The Tier-1 lender reported headline revenue of 90 billion naira in second quarter. Over the first quarter, that's 5% better. But if you do that on a year-on-year basis, that's down 24%. So the second quarter earnings or revenue by GT Bank, if you put that over the second quarter of 2016, what was reported in the second quarter of this year was down 24% over the same period in 2016. However, this lender reported a net income around 42 billion naira in the second quarter. Interest income on loans was strong, as well as what GT Bank made as income on securities trading treasury bills and bonds. And those two items also contributed to that strong headline revenue of a gross income of 90 billion, almost 100 billion naira. Also helping the GT Bank earnings were FX trading and treasury bills trading profit. However, the FX revaluation, as you may have heard on the program in the last days or so, the FX revaluation for the banks are beginning to taper off. So the gains reported by GT Bank in second quarter was down significantly, but that was compensated for by higher FX trading and treasury bills. You saw what we reported a few days ago, isn't it? It was about 20% that the interest that you get now on short-dated treasuries, and that is a good one for the books in GT Bank. Meantime, this morning, we got a credit research report from Exotis Capital based in London, and says that the cost-income ratio of GT Bank is still the best in the class. There are 5 banks in that class, and said the cost-to-income ratio for this lender, GT Bank, is still the best. Meantime, GT Bank restated its AMCON-related levy like its counterpart, Zenith Bank. If you look at the non-performing ratio, slightly higher, as the bank's gross loans declined. The total deposits in GT Bank also declined about 2%, according to this report, in the second quarter. And the loans to customers also declined in the second quarter. what's the bottom line? Earnings per share of 300 kobo and a cash dividend of about 30 kobo is being proposed. Okay, let's get a sense of all these numbers. We had Zenith a few days ago. Now we have GT Bank. Of course, the market was in the red for the last couple of days. We lost about 300 billion naira since this week started. That's quite a heavy pullback for the market. That was quite aggressive in the past couple of weeks. 2.25% decline yesterday. Let's get a bit of let's read the market tea leaves, as we call it, with Olalekan Olabode, who is the head of research at Vetiva Capital Management. Let's get him on Skype from downtown Lagos. Olalekan, good morning. It's good to have you on the program.
Good morning. It's good to be here.
Let's have this conversation. Everybody's busy right now, and I'm sure folks like yourself would have spent a lot of hours in the office yesterday trying to pore over the GT Bank earnings. What are you reading? What's your reading of these earnings?
Yeah, overall, GT Bank's result came in better than market expectation. We saw a mild 2% top-line growth. However, the biggest benefit for the bank was in the loan loss portfolio. Their loan loss came in at 7 billion, significantly lower than the 37 billion reported last year and lower than our own expectation of about 12 billion. Apart from that, we saw very strong interest income growth. Interest income grew over 50%, which actually supported top line. You recall that in H1 2016, GT Bank actually reported a very strong non-interest income following the currency devaluation we saw sometime in June 2016. We did not see that income line this year, but the strong interest income was still able to support the top line. You know, when you look at the fact that GT Bank reported a very strong Q1 numbers, the Q2 number actually came in slightly even better than what we saw in Q1. In 2016, GT reported a record profit high in terms of PAT, and I can tell you that going by the run rate we have already seen at the end of H1 2017, we are likely going to beat the run rate of 2016, which is a very impressive performance from GT.